name is Jeffrey Davis, and I'm enjoying spending my time speaking to entrepreneurs and getting more informed every day. It's sort of the University of the Air, and we're always publishing material every day on our YouTube channel and on our Radio Entrepreneurs website. Our next guest is one of our newer reporters. Manny Frangiadakis.
There you go. You got it this time.
I'm better at Greek names than Russian names. From 12 Point Wealth Management, and you're going to talk to us today about what, Manny?
Different tax strategies that business owners can implement that could come handy right now and throughout the whole year.
It's time, this weekend I'm going to break out my shoe box.
There you go.
And I'm going to break out all my stuff, put it into categories, get it organized. I call it organized. I don't think my accountant does. Pass it off to my wife and walk away.
Yeah, as long as the receipts are all in there, right?
My wife's great at this stuff.
Just stuck together with pieces of gum or whatever.
I don't know about gum, but it is that time of year to figure out how to not spend money and how to save money.
Yep, exactly.
Good. So why don't you help us a little bit better than I could?
Well, I mean, there's a few different things you can start to think about. And the number one thing when it comes to taxes is you really, don't want to wait till the last minute to start figuring it out, especially if you're a business owner, because there's different things that you could do throughout the year that could come really in handy. And maybe not even this year, but the next year, The government has put in place different credits, deductions you can take if you implement different activities. There are different strategies you can do if you're expecting a very high profitable year. Maybe you have higher sales volume this year and you know that within the next 3 years you might need to purchase a new piece of expensive machinery or a couple new vehicles. Let's say you have an industry that does huge deliveries and you need a couple new 18-wheelers. Buy them in the year that you have very high revenue. That's a really good tax deduction you can take.
Right, that's good.
I mean, there's different exchanges you can do as well. I mean, there's 1031 exchanges and 1035 exchanges. I don't know if you're familiar with those.
I've heard about them.
Okay, so
my wife knows about them.
So a 1031 exchange is, let's say you are a business owner.
Right.
And you have a piece of property, let's say it's a warehouse, and you've outgrown it, but you're looking to move forward and start investing into the future. A 1031 exchange allows you to sell that piece of property, and instead of taking the cost basis right now and taking the tax on it, you can take that payment and put it to another building that you're going to need for that industry and move the cost basis forward.
I actually just had a client do that in an investment banking deal where we bought a business, and it really worked out nicely for them.
And 1035s are...
It released funds that made it easier to do the deal.
Yeah. 1035s are along the same idea, except it's just more business insurance policies. So when you need to maybe take a business life insurance policy or a business annuity, when you're taking that on, you can actually pass that forward if you're going to reinvest into a future one.
Well, that's a good one. Is there ever a situation where taking a tax deduction is not advantageous to an owner?
Yeah, there actually is. So let's say you are a business owner. You're probably thinking about you've got 4 to 5 years left before you want to retire.
Right.
Taking a tax deduction towards the end of that period can actually make your business seem less profitable. So if you're planning on selling and you're taking a negative hit on it because you're taking so many deductions on it, you might actually not get the right purchase price for your business. You could be selling yourself short. So you might want to stop taking as many deductions as you get closer to that retirement period to make your business seem more profitable. Cash balance plan.
Right.
They're actually, most people that you would think about it, most actually accountants think that they're illegal because you can't actually, people don't really know too much about them. A cash balance plan is within the last 5 years of your retirement, if you're a very high earning employee and you have a discrimination clause in terms of you're making X amount of dollars, but your employees are, have a huge age gap and maybe only making minimum wage or whatnot, you can actually put away a very good amount of money the very last 5 years of that plan.